It's time for last keynote speaker of the day and last keynote speaker of Deutsche Goldmesse. I had the pleasure of interviewing him earlier, so I know what he's going to talk about. I'm not going to give anything away, but it's worth sticking around because there's a couple surprises in there. And I'm looking forward to having Lobo Tiggre back here on stage. He's the independent speculator, the due diligence guy on Twitter, and we've had some fantastic chats in the recent past, live on Twitter and on YouTube. So make sure to tune in. We try to go live every Fed day. Every Fed announcement Wednesday. We didn't manage to do it this Wednesday because we were both traveling and busy here with Deutsche Goldmesse, but he already promised me we'll do it again next time in June. I have to look up the exact date when the Fed meeting is actually. But it's great fun. We have about 800 people joining us live for those Fed discussions. And Lobo, I'm excited that you're back here in Frankfurt. Thanks so much for coming all the way from Puerto Rico.
Thank you very much. I'm not sure if well, all right. Well, that was interesting, and I appreciated that last answer. That was actually, and I don't own Victoria. I'm not sure I even have a thumbs up on it, sorry. But that was a good answer. You know, are you going to hedge? Why are you hedged? Well, we have debt. And if I'm, you know, that makes sense. As a CEO, I've got a company, I've got a responsibility. I have to pay this debt. I can't fail. I can't not pay this debt. So if the hedge, I know you don't hate the hedge, I know gold bulls don't want to hedge, but if that allows me to sleep at night, I know I'm going to be able to pay my debt, I think that is a valid reason. So for whatever that's worth, I think that was smart. That was good. And your question, I think that was also a fair answer. I mean, come on. Gold stocks writ large have all done a crappy job. So that's not a singular honor in this case. All right, thank you very much for coming down. I also, while I'm rambling here at the beginning, any late stragglers to come in, how many of you caught the panel here before with my brother-in-arms, Vukashin, and the Awale team? Did anybody catch that? So a couple quick irrelevancies. I'll make it very quick. Vukashin. Vuk means wolf in Serbian. Lobo means wolf in Spanish. That's not why I hired him. He's obviously brilliant. Bundle of energy, but I can't tell you how proud I am of how quickly this boy has learned the ropes, the business. And I'll also tell you, I'm one of those people he circulated his infamous now white paper to, and I said, now that doesn't mean it was crap and he was an idiot. It means it was pre-discovery, and that's not my thing. But he had the gumption, I'll use a polite term, you know, to go ahead and the other, it wasn't just pre-discovery. It was like, this, look at this. This is great. We just need to replace management. Like, oh, screw it. You know, that's the only problem. We just, oh, no. So, but he got it done. He got together with people who could help it get him done, and that's really quite something for a young buck to pull something like that off. Not alone, of course, but wow, watch this man's career. I don't think I'll have the good fortune to have his attention for too long. But anyway, okay, so Deutsche Goldmesse. I was here just a few months ago, and I told you guys that for 2023, uranium was my highest conviction trade, and that for 2024, it was going to be gold. Just gold, not silver, not uranium. And I'm not a broken clock that always says gold, and I happen to be right this year. I made a pivot from one yellow metal to the other, and here we are a few months later, and gold's gone nuts. And I have all kinds of people wanting to pat me on the back, ask me where I hide my crystal ball, all that stuff. Those of you who read me know to be right for the wrong reason is still being wrong. Okay, so far, I have been flat out dead wrong about 2024 in gold. Now, how can that be with gold up to 2,400? Well, I didn't anticipate some new buyer coming into the market, some new whale just going nuts on the gold price. And I do think it's a new whale. I think we have a new buyer. It's not just the central banks. The central banks have been buying since the US weaponized the dollar. There's no reason for that to produce a hockey stick this year. It wasn't the war in the Middle East. That was last fall. There is a new buyer in this space. I'll come back to that. But the immediate point, though, is And I'm about to tell you something, so I just don't want everybody to rush out and say, oh, Lobo was right last time, so let's go do this and pile in. I'm not a guru. I don't see the future. I'm just a due diligence guy. And I happen to have a few opinions about things because I have to. And people want to know because they're crazy. So here we are. So last year I said for 2024, gold was my highest conviction trade, but that was based on what I still think of as the impending recession denier capitulation in the United States. Recessions are always good for gold. So on that basis, on that basis, I'm a gold bull. But I also think the U.S. response, the power suit, will be instantly to unleash the easy money helicopters. It'll be fiscal and monetary policy. That will be terrific for gold. And that hasn't happened yet. And team soft landing has morphed into team no landing. They're already dancing on my grave. Haha, Lobo was wrong. Or if they even knew my name, they might say that, right? Or they might have until yesterday. So there's good news and there's bad news in this. You know, the bad news is if you have an unidentified whale in the marketplace that you're in, you can't forecast its behavior. So this new buying that we've seen, everybody's celebrating, woohoo, $2,400 gold, yay. But you know, what the market giveth, the market taketh away. And since we don't know who this is, what their motives are, when they're satisfied, when they might change course, it's possible that this new buyer that's taken us to 2,400 could have already peaked. That could be done. This retreat down to 2,300 might be the end of that new buying. And then we revert to trend. So the good news is that all these reasons why I told you last year that I was bullish on gold are still in play, and I think still yet ahead of us. But it does mean that there's potential for correction in the near term. The recession deniers have not capitulated yet. They're still talking about all this strength, well, at least until yesterday. The other thing is my wife's standing there in the back. She did a wonderful doodle for our newsletter. And this is her version of my explanation of the U.S. economy being like somebody perched on a one-legged stool. And that one leg is this strong labor market and the consumer right there. As long as the jobs are strong, the consumers keep spending, everything is fine. Everything else might be crap, but as long as that's good, we're fine. And so you've got the Fed has a rope, you know, over the guy's neck on the stool, and the Fed's saying everything is fine, this is perfectly safe, as he raises the interest rates. So yesterday we had a big surprise to the downside in the U.S. labor market. And okay, unemployment is still only 3.9%. That's, you know, historic lows and all that. But there's something that I call the Gundlach indicator. Jeff Gundlach is famous for pointing out that when unemployment rises to meet the long-term trend, that is a 100% guarantee of recession. That indicator has never failed. And we are there right now. The lines didn't actually kiss yesterday. They were that close. But the values are the same. One's slightly ahead of the other. In today's newsletter, I'll put out the charts. But we are there now. This is in 70, 80 years of data, this recession indicator, amongst all recession indicators, this one has never failed. And it is telling us that we're going into recession now. So team soft landing, team no landing, they should be nervous. Team Lobo, well, you know, I've taken a lot of heat for, well, you know, where's the recession? Where's the recession? Even gold bugs are like, well, gee, you know, it's been so long, maybe we're not going to get the recession. I think I'm right. I'm doubling down. Okay. So what's new, though? What's new? Well, what's new, and this did start about the time I was here last year, and that is that if you recall, how many of you were here last year? How many of you heard me last year? So if you remember, I said, it's just gold. It's not gold and silver, because silver has been tracking copper more than gold over the last year. You remember that? So this is new. This is the takeaway, the key takeaway for you guys here. Since last fall, since the very unfortunate events in the Middle East and the new war there, silver has started tracking gold again as it used to, as a monetary metal. Silver has been responding on days where copper and oil go down and gold goes up. silver has been going up with gold instead of tracking copper. This is very, very important. Even Darth Silver admits that silver is acting as a monetary metal should in ways that it really hasn't for some time. And I don't remember if I said this last time, but my thesis was not bearish on silver. You know, the Darth Silver thesis is not sell all your silver, forget silver, silver's done. The thesis is it's more and more of an industrial metal now. And the particular thing that silver bulls hate is that I say that if or when we see a new gold standard, there's no particular reason for it to be a bimetallic standard. If gold goes back into circulation as money, I mean, gold is money, but if it goes back into circulation as money, with the crypto exchanges and all these technologies that we have now, there's no particular need for silver to make change for gold. So I'm not convinced that silver will go back into circulation as money. And by the way, central banks are hoarding gold, not silver, so maybe they agree with me. So that's the Darth Silver thesis. It's not a bear thesis. And in fact, the industrial side for silver, as bullish as I am on copper going forward, is extremely bullish for silver. My position is actually a win-win for silver. Silver wins if monetary and investment demand goes nuts, and silver wins if industrial demand goes nuts. I like silver a lot. But since it has that strong industrial side, there was a risk of going strong into silver before the capitulation on the recession, because recessions always, always, always whack industrial metals. And people say, well, silver is, but after 2020, we had gold and silver crash with everything else in the flash crash. Gold comes screaming back, as it always does after the crash when the liquidity crunch passes, but silver didn't. Right? So you can hate me and call me names and throw tomatoes at me if you want, silver bulls, but the fact is that silver did not come back. And anybody paying attention to the facts and not their religion about, their favorite metals can't ignore that fact. Therefore, I think it was reasonable to be concerned that this time, going into the recession, silver would take it harder than gold. And so my thesis for this year was gold only, not, my top conviction trade wasn't uranium, it was gold, not silver, not anything else. And I'm now changing that. Because the data now, since last fall, is telling us that silver can, will, and is reacting like a monetary metal this year. I mean, silver getting back to $30 again, almost. What more evidence would even Darth Silver need that silver is back in the game? So this is a new thing. Silver is back on my shopping list. I'm now willing to buy silver stocks this year. My highest conviction trade for 2024, updated, is gold and silver. Or maybe even silver and gold, because silver has that win-win side. Jeff Clark is grinning like back there. But so yes, even Darth Silver is more bullish on silver now. Now here's the caveat. Here's the problem. You can't just rush out and buy every silver stock, because political risk is much harder to avoid in the silver space than the gold space. For whatever reason, and if you're religious, next time you offer up your prayers, maybe you can ask God on my behalf, why the heck did he put the most corrupt governments on the world on top of most silver deposits? Maybe there's actually a historical economic reason for that. But, Peru has been problematic. Bolivia has been on my no-fly zone for a long time. And now Mexico is really taking a turn for the worst. And I'll tell you, right now, I would not invest another dollar in Mexico. Not one. No matter how great the silver company was, no matter how great the discovery of the mine was, no matter how profitable, how big, I would not put another dollar at risk in any company in Mexico until we see how this election goes. And the odds right now are that Claudia Sheinbaum wins, and she's I was just in Mexico now, and not even her fans, but the feedback I got from everybody I interviewed, all sides of the political spectrum, is that she's going to be as bad as AMLO or worse. And she herself has said that she favors his proposal to put not just a ministerial level or not just a law, but a constitutional ban against open pit mining in Mexico. And you could say, okay, well, that's just open pit mining, but it doesn't. That would be such a shock. That would be such a negative that I think all Mexico plays would get tarred with that same brush, and not unreasonably. It would show the hostility of the government. And maybe they only get a constitutional ban on one kind of mining, but what do you think the rest of the regulatory apparatus is going to do to all mining in Mexico? And people like to say, oh, well, mining is so important in Mexico, they're not going to kill the goose that lays the golden egg. Well, you know what? Psychotic countries kill the goose all the time. Happens all the time. You know, you can't count on any government to be rational or reasonable. And the fact is, you know, mining is something like 4% of GDP of Mexico. So yeah, it's big. It's a lot. But it's only 4%. It's not like Peru, where it's a double-digit component of the GDP. So I can see a political calculus going on where they'll take a 4% hit in order to reassure their popularity with their supporters. And you know, the environmental religion is as strong in Mexico as anywhere else. If anything, all of Latin America has really imbibed more deeply of that Kool-Aid than even here in Germany. I mean, I'm talking Mexico, but all of Latin America should be on your alert list for rising political risk. All the Hollywood movies have convinced everybody down there that mining is evil. We're going to fly clear across the galaxy to mine under the tree with the pretty blue people because there's nowhere else we can mine. So just beware. You know, just because Darth Silver has converted and come back into the fold and silver's great, that doesn't mean you rush out and buy everything in silver. Watch out for political risk. The reality is that most of the best deposits are in the worst countries. So caveat emptor. That having been said, the other thing that I said when I was here last year is, you know, last year was my year for uranium. And hey, uranium went up to 106. Lobo's a genius. Well, I didn't think it was going to go that high. But I also said the uranium was likely to correct. And here we are. It has corrected. So, you know, the value proposition for me skewed me towards the other yellow metal, gold. Now that uranium is in correction mode, I'm actually more interested in uranium than I was the last time I came here to talk to you. At that point, you know, I was looking to take profits, and I have. At this point, I'm looking to deploy more. I don't see much more downside in uranium. And, you know, people like gold bulls, uranium bulls are only happy when it's going up. None of this sideways business. But sideways at $90, you know, the studies with the most egregiously high price assumptions for uranium were studied at like $75 or something like that. So $90 uranium is well above the price that people need to actually make money. In the business of doing the mining, never mind the speculations on the stocks, the actual business of making money in the uranium mining space, we're well above the incentive price needed. So the better projects are going to gush cash. The so-so mediocre projects work in this environment. A uranium speculator today doesn't need uranium to budge at all over the next year or two to make money. Projects will be made, profits will be made, developers will advance projects, financing will happen at these price levels, and money will be made here. But I do think uranium goes back up again. You know, Kazakhstan yanking its guidance is huge. They still haven't updated their guidance for 2025. They said they would do that this summer. And I'll agree with Justin Hune on this. I don't think there's any way they're going to be able to ramp up as they're still, you know, the current guidance is for more production next year. And I'm in the, yeah, show me, don't tell me camp. So my marching orders for 2024 have moderated or have been modified substantially since I was here with you last. Last year it was just focus on gold this year. Not because I'm a gold bull and all I ever care about is gold. You know, the stop clock is right twice a day. It was because that was how things had lined up at that time. Now it's gold and silver or silver and gold. And if you have more money to put into the markets, look for uranium as well. Any of the uranium stocks that have corrected. And if you missed uranium last year, I think it's a godsend right now that we have a correction in the uranium space. Which stocks to buy? I don't give out free stock tips, but I'll give you a free method. And that is, if the underlying metal, whether it's copper or gold or silver or uranium, if the metal goes up and the stock does nothing, Mr. Market is telling you that there's something wrong with that story. Now, you may be right. You may be another Vukasin, and you spot something that the market overlooks. But most of the time, you're wrong. You've made a bad stock pick. So whenever the metal goes up and your stock does nothing, you have to have a good, honest conversation with yourself. Have I messed up? And you can't be religious about this. You don't, I'm underwater. I don't want to take a loss. That can't be the reason to hold the stock. If you hold on to a stock that is not performing, you have to do an honest reevaluation and as independently as you can, convince yourself, no, my basis for speculation is sound here. I'm going to hold this. You can't hold it because you don't want to take a loss. So that's the not secret recipe. But look for stocks that have responded to gold or silver, uranium, but they still have a compelling value proposition. They're not at all-time highs or 52-week highs. They're not ignoring the metals, but they still have an upside to go. That's where I would focus my buying right now. And I like to take, I did a big Q&A session last night, but I like to take questions from the audience, so I'll wrap up with one more big takeaway idea. We'll get their way. If you have diversification in your portfolio or metals portfolio, and I'm not talking about real estate or tech stocks or anything else you do with your stuff. I'm talking about the metals and mining part of your portfolio. If you listen to what I'm saying, the two yellow metals, there is a self-hedging aspect to doing a portfolio this way. If I'm wrong about the recession, and Powell and Biden have kissed the boo-boo and everything's fine and everything's happy and the economy goes up from here, and we don't need no stinking safe haven assets, gold will probably go down. That's the contra tigre case here. My gold stocks and gold will probably go down. But my uranium stocks should do great. In that environment, energy demand, uranium is somewhat independent of the economy anyway, baseload power and all that. But in that environment, would be very bullish for the energy sector. The uranium stocks should go nuts. So if I'm wrong about gold, my rightness about uranium should at the very least make up for it and possibly more than make up for it. But if I'm right about the economy and gold goes up, if uranium went down because that was bad for the energy sector because there's a recession and all this scary stuff, then my gold would make up for the uranium. But uranium is not oil. Uranium is necessary to keep the lights on in hospitals and airports and the kinds of things that you have to have that baseload power for. So I see uranium as actually having very limited downside. So I see it as actually a win-win. I don't see it as win-lose, gold versus uranium. But I see the uranium hedging the gold in my portfolio, and in worst-case scenario, the gold hedging my uranium in portfolio. And actually, my expectation for 2024, by the end of this year, if there's another one of these in November, and they invite me back again, I think we'll see both metals have gone up. And the stocks in both metals would do really well. And to your question, the gold stocks have underperformed the metal. Never mind the leverage they're supposed to get. On average, the gold stocks have underperformed the metal, and that was completely broken. They're not supposed to do that. If gold goes up 1%, the gold stocks are supposed to go up 4 or 5%. That's why we own them. If not, why bother? Let's just buy the metal, right? I think that changes this year. I think there's reasons for that. I won't get too far into it. I have an essay on the free part of the website called Are Gold Stocks Broken? If you haven't read that, I recommend it. There are several charts. I outline my case. There are reasons why the gold stocks have underperformed, and I think that is being addressed right now. The earnings season that we're in right now is beginning to address it, and I think if the good news that we've seen so far continues to next quarter, we'll see that addressed. The alligator jaws between gold and the gold stocks, I think that snaps shut with the stocks catching up to gold, not gold coming down to the stocks. So I'm actually quite excited about this. If you've seen me speak before, me saying I'm quite excited is the equivalent of Kramer pounding that buy button on his on TV. So that's it. I don't have a long speech. My goal is always to try to give you the most important thing I can right now, and that's the guidance. Silver's back on the shopping list. Everything that I liked about gold when I addressed you last is still ahead of us. So if there's a correction, if this new whale goes away, he's done, satisfied, swims off into the depths, and we see a correction, I want to buy with both hands. If he doesn't, if he keeps buying and it keeps going up, then we go into the recessionary high gold environment from a much higher base. And I didn't even want to say what the gold price could be at that point. Sorry, the gold-dollar exchange ratio, because I'll sound like a promoter. But it's pretty exciting. That's me pounding the button. So silver and gold, and don't forget the other yellow metal, that self-hedging in the portfolio without having to risk buying, say, oil, which would tank in a recessionary environment, let alone copper. Copper right now is, I think, very high risk. I love copper. For decades going forward, I'm a huge copper bull. But history is that copper always, always, always goes down when people realize we're going into recession. So those are the takeaways. And I think I have a few minutes, so I'm happy to take some questions. Yes, Wei.
Yeah. I have bought several uranium companies, and there was one state. I thought, what's wrong with this company? Should I sell it? And suddenly it dropped. And I bought it, and it came down again. What should I do?
Well, my answer, I bought a stock and it's gone down. What should I do? It's difficult for me to answer that. But the general thing would be, why did it go down? Was there company-specific news? If there was, I need to evaluate that news. The reason to hold a stock is never, ever because I don't want to take a loss. Right? You need to grow up, be a big boy or a girl. If I made a mistake, take it on the chin, take the loss, redeploy the capital into something that has a better chance of coming back. But there are times where a stock will go down, there's no news. You ask the network, if you're a client of mine, you ask me what I think. And we may know of a rumor, we may know of something, and we'll tell you if we do. But if not, it could just be a large shareholder got divorced and had to sell half his assets to satisfy the requirements. Or it could be some big fund had a bunch of redemptions and they just had to sell a whole bunch of things. So there can be completely random fluctuations in these things. So the price movement alone is not a reason to sell. The price movement is a reason to look at it again. So I don't want to go on too long on one question, but I never use stop losses because if a juniors in particular, and I focus on the junior stocks, they can drop 30% a day just because somebody has a bad hair day, right? And that can be a fantastic buying opportunity. And if I've got a stop loss at Schwab or Fidelity or whatever, and they sell the stock at what would have been the best opportunity all year to average down, well, I've just made a big mistake. So if I set a trigger like that, then it doesn't sell the stock for me. It sets off a little red light. Look at this. Pay attention to this. So I will make a human decision. If it's down because there was a coup d'etat in the country, well, that's a good reason to get out before the harm comes, right? Or if it's down because the legendary endangered mosquito was discovered on the key property, that's a reason to get out. If it's down for no reason, or maybe there's a financing, right? And the financing is priced below market. The thing drops suddenly to the financing. That happens all the time. That can be a great reason to buy. Yes, sir.
I think it's a perfect follow-up question is, do you believe in technical analysis for junior money stocks?
No. That would be the short answer. I don't ignore the charts. I do use TA, or a mild, soft kind of TA, to set my entry and exit levels. And I'll look at, I can't ignore the actual data on the charts. If I'm looking to buy something, at what price do I want to buy? Yeah, I'll use TA for that. But I'm a fundamentalist. And so, yeah, no. I'm sorry. I mean, I have very good friends who really believe in it, but let's just say my experience with that is I've had sometimes people have shown me a terrific track record and I get excited, like this, my system works. And I go, oh, that's really great. And I buy into it. And then something unexpected happens and the system doesn't work. And I'm always the guy that buys, because I'm hesitant maybe, I buy right before the system breaks down. Oh, it worked 5 years. And this year, Lobo bought and it doesn't work. Okay. So just, no, I'm not a TA. There was another hand over here. Yes, sir.
My question is about sentiment in generalist investors in gold. Let's just focus on gold. So let's say there is a recession. Do you see investors moving out of the crypto world and the tech stocks into gold? Are people starting to get religion on this? Or
Yeah.
is it...
Well, so I have a couple answers to this. One is I've had people on my team who came to gold and mining stocks from crypto. Like, there are Bitcoin maximalists out there that it's like the one ring of power that's going to rule them all, in Mordor forever, and it's going to be Bitcoin, right? But most of the people that I've talked to in crypto land, they got the speculator bug. They made a ton of money with little effort, and now they're looking around, what else can I do? What else offers me this kind of leverage? And, there's mining stocks do this all the time. For a crypto to go 20 to 1, like Bitcoin did in 2017, is seen as a once-in-a-lifetime event. In the mining space, there are 10 and 20 baggers every year. Now, nobody, not me, not Doug Casey, not Rick Rule, nobody knows which one it's going to be. But it happens every year, not once in a lifetime. So I know people, like, this isn't just hypothetical that I've heard rumors. I know people who came to mining stocks and gold in particular from the crypto space. That is happening. There are people out there, they're not religious about it. They are speculators, and anything that's working will do. Another part of it, though, is that even cryptos aside, in the markets, there's always, I call it a sloshing pool of momentum-chasing capital, and whatever the flavor of the day is, whether it's cryptos or pot stocks or AI or whatever it is, there's money that will just come piling into whatever is the flavor of the day. There is very real potential for both yellow metals to become flavors of the day this year. The green mantra now is coming onto uranium's shoulders. And there's people out there think that we're all going to die in 11 years if we don't stop oil now. That's fantastic for uranium. I mean, you cannot solve that problem without uranium and nuclear power. And it's such a tiny market. It's Doug Casey's contents of the Hoover Dam through the garden hose metaphor. If that catches on and people are looking around what's working and uranium's gone up and the stocks are moving and the story is there, that could go nuts. Gold actually has that potential too. Now, suppose I'm right about the recession and the markets go down. They don't have to crash, by the way, because the Fed has trained the markets to expect the Fed to come to the rescue. So bad news could actually be good news even in the case of a recession. So keep that in mind, folks. Recession does not necessarily mean market crash. The markets could go nuts on a recession capitulation. But if the markets do go down and investors are now looking around, what's working, where do I deploy? And there's gold miners actually delivering, not just gold going up, but the miners delivering improved margins. Well, that could make gold have a flavor of the day reaction too. This isn't a prediction. I'm not saying this will happen. It's an if not when statement. But the if is huge. And even if it doesn't happen, the gold stocks will still do well. So yeah, I do see potential rotation there. And by the way, it's not either or. Even if Bitcoin is doing great, I don't think that Bitcoin means there's no gold or whatever. There's always momentum chasing capital that will look for anything that's working. And the worse the market is in general, the more the shining beacons in the night attract attention. Am I getting the hook here, Kai, or can I take any more?
People are not leaving yet.
Yeah,
so
nobody.
I'm guessing we're fine. So I guess we've got another, couple of questions we want to.
Anybody else? If not, that's good.
Fantastic. No.
Yes, sir.
I have a question. You mentioned the upcoming election in Mexico. I think the most prominent one is in the US.
Yeah, but it's the least significant one because either side, it's not just the stupid party or the evil party wins, and they're both bad news. It's that both of the candidates are inflationary. Both of them hate China. Their actual policies on a fundamental level. I mean, Trump was a lifelong Democrat until he realized that the Republicans would be stupid enough to nominate him. Right? And he said that. This isn't me. This is Trump. I'm quoting him. He said if he ever ran, I'm serious. He said if I run for president, I'll run as a Republican because they would be dumb enough to nominate me. And that's what happened, right? So their policies are quite similar. They're both tough on China. Remember, the first $1 trillion deficits were under Trump, not Biden. And the Republicans like to point, oh, Biden did everything wrong, Biden did. I'm not a Biden fan. I'm not defending Biden. I'm saying that both of them are the same. Both of them are inflationary. Both of them would send the money helicopters out just as fast. Both of them would try to curry favor with the voters. So I don't think it really matters that much to the fundamental economic outlook, which one goes there. Now, it might make a difference if Trump gets elected and he puts more conservatives on the Supreme Court longer down for the future of the country. I think that might actually be a plus. Doesn't mean I vote for him. Fortunately, I'm a Puerto Rican and I can't vote for president. So neither of them is my fault, whatever happens. But in terms of what matters to us as metals and mining speculators, I don't see a big difference. Both of them are inflationary. Doesn't change the course. Yes, sir.
Maybe you can elaborate a little bit more on the whale in the gold market. What is your speculation? We heard a lot about the Chinese people buying. I'm really not sure.
Yeah, no, I don't think it's the Chinese teenagers buying gold, though there is a lot of that. I don't know if you've seen this. There's a fashion now in China to buy these little gold beads. Because they're, it's relatively inexpensive. Anybody can do it. You can sock some away. That's hard to assay. And if I have a little gold bead I got somewhere in China and I'm trying to sell it in Berlin, it's not the same as taking a U.S. Eagle coin, that's readily accepted and fungible. So, but okay, so I don't know what's going on. I have some ideas, and we're seeing more substantial investors out there saying, I forget the name of the guy, it wasn't Gundlach, he's already in gold. It was Druckenmiller, right? Druckenmiller is saying, I'm putting gold in my portfolio. You're seeing more of that. You're seeing more generalist talking heads on financial media saying, well, we're doing this, we're doing, not the Magnificent Seven, but we're doing the, the Magnificent Five, and we're doing a little bit of EM, and we're hedging with a bit of gold. And this isn't gold bugs, this is generalist types. Right? And you've got things like Citi with 2,500 gold target. You've got JP Morgan. These are not, gold bugs. If anything, JP Morgan is the anti-gold institution, and their target is 3,000. So I think what's going on, and there's no way I can prove this. What I think is going on is, how many of you heard Rick Rule say that the mean portfolio allocation to gold over the last 4 decades is 2%, and it is currently 0.5%. So we don't need a gold mania or anything, but if gold allocation just reverts to the mean, that implies a 4x increase in investment demand for gold. And we're not talking everybody becoming gold bugs, that's just 2%. But you know what, even if the use case has changed, Bitcoin has changed that, and it never goes back to 2%, let's just say it goes to 1%. If around the world, enough people to just decide, 1% decided I'm going to allocate a bit to gold, that would double the investment demand for gold. That would have a salubrious impact on the gold-dollar exchange ratio. So this is what I think is happening. I think this reallocation, and the two hot wars we have are part of this, I think. The sticky inflation is part of this. And maybe people who haven't drank the Fed's Kool-Aid and see the cracks in the labor market before the government reports it are seeing, like, smart people, the Gundlachs of the world, and So I think there's deep-pocketed money out there that's starting to say, you know what, I don't have to be a gold bug, but it wouldn't hurt to have just 1% of a hedge in gold in my portfolio. And even people who don't get it, I've seen people like on Yahoo Finance and Bloomberg and mainstream things, I've seen people say, well, what else am I going to do, buy gold? Like dismissively. But that they're even saying that tells you that people are aware of gold's role as a hedge. It's still there, despite Bitcoin. Gold's not dead yet. I'm not dead yet.
And on that bombshell.
On that bombshell. Okay, thank you very much.